Hey traders, this is Jeff Yates coming to you from Full Throttle Traders. So today I want to give you a little bit of content that we work with our members on. I like to kind of do things in analogies. And one of the things that I came up with, there's two things actually, was the Venus flytrap concept. So stay with me. I'm going to show you how this will improve your trading, bar none. When you see what I'm going to show you here in the next few slides, in the short period of time that we're together, I want you to watch this and ask yourself, is this the type of trading that you're doing? So take a look at this. So Venus flytraps and what I call tree branch indicators. So this is just some of the material that I do live at our site, our members at Full Throttle Traders get. I thought I'd bring that to YouTube here for the first time ever and share with you some of the different concepts that we trade around. Let's take a look at this. So this is called, are you trading into Venus flytraps? Well, kind of a unique thing in the fact that if you think about what is a Venus flytrap, right? They're sweet, they're open up, they're sitting there, they look comfortable, they look safe, nice sweet nectar. And so flies or bugs come into that area because of safe look and it closes up. Very often that's the same with market conditions, right? Why would we ever enter a trade that doesn't look good? Or at least from the education that you may have to this point, if the trade doesn't look good, why are you entering the trade? Is it luck? I think not. I think there's something that's probably giving you the inclination that the trade looks good. So let's talk about that using the Venus flytrap analogy. Now, let's talk a little bit about what is it? What the Venus flytrap, luring with a promise. Just as a Venus flytrap attracts prey with its vibrant color and sweet nectar, certain trading setups that may look appealing to traders, drawing them in with potential or for high returns. That's what a fly trap is. It basically gives you the illusion that this trade is going to perform. Otherwise, why would we ever want to participate in that? So it has to be real, and it has to be able to have that indication among a lot of traders, whether you're experienced or even a beginner or a novice. Hidden traps. The inside of a Venus flytrap is designed to look safe until it snaps shut. Similarly, some market zones appear favorable, but can contain hidden resistance or support levels that can lead to losses. And again, that's just that you ever heard the analogy of just you're driving down the highway and you see the water and the oasis. It's not there, but your mind, the way the image is, tells you it's there. And you focus on the image. When you get there, you haven't went far enough because it never arrives. It's the same with the fly trap. And once again, just by following some of these key components that I teach here today in the short time we're together, there's no question it will improve your trading. So hang with me and watch to the end, and I'm going to be unveiling all this for you. And finally, a false comfort. The trap remains open for a while, giving a false sense of security. In trading, a position may initially move in the trader's favor, only to reverse sharply. How many times have we seen that in our trading life? So take a look here. Hope you enjoy the presentation centered around tree branch indicators and Venus flytraps. The key, using the correct lines on the correct time frames. Now, moving averages, right, are a part of this. Gap fills, open or even open lines can act as dynamic support and resistance levels, meaning that moving average is not support resistance, but it's self-fulfilling. If enough people respond to that, it will become a subjective support area or a subjective resistance area for that matter, right? Often halting stop moves as they approach. These key levels can signal potential reversals or pauses in momentum. So what do I use this on? What's the time frame? Well, I use VWAP. Most people do use a VWAP of some sort. Some use an anchor VWAP over a period of time. Some use a floating VWAP. I use more of a floating VWAP. It's the same on all time frames. But where it separates yourself, it's not just VWAP alone. You have to include this 65-minute chart. I'm watching the 9 EMA, and you'll see all of these on my charts here momentarily. The 15-minute chart, the 5-minute chart must have the 9 EMA on it, period. Okay. EMA for the beginners out there means this exponential moving average, means it can change while before the day is done. A simple moving average means that at the end of the day, the value is updated. But in an exponential moving average, the value is updated every candle as the market's live in that particular day. An 8 EMA on the daily chart, essential you have that 8 EMA on the daily chart. And believe me, you're not the only people looking at the EMA. Hedge funds, large money, will not participate in a stock with any great vigor unless they can see that clearly from either a pattern perspective using multiple time frames and or the 8 EMA, and where is price in relation to that. So again, these are things you'll want to look. And again, a lot of the teachings that I do in Full Throttle Traders goes into a lot more depth. You're just going to see a fringe, but this fringe of what you're going to see today will make dramatic, monumental differences in your trading. And finally, we've heard of this, the 200 moving average on the daily chart. But if you're watching on a 5-minute chart, it's powerful. The 200 on a 2 is powerful, more so on the 5, 15, 65, and of course the daily, weekly, monthly, we all know that it is. So these are the things that centered around tree branch indicators. And the tree branch indicator is basically illusions where you might see price could go to get in long or short on a particular stock or option trade, only to see them close up because you're seeing it on one time frame without anything there. These tree branches resemble the fly trap. And these fly traps will shut here. 80% of the time they will close up on you. And not that they won't go further later. I mean, who are we to say that they won't go? But usually there's a time variance. Most of stocks that move beyond these happen with a gap, or it's early in the morning, it gets momentum and it breaks loose of these fly traps. But many times it's just from a gap up over these fly traps before things get going. So today I'm going to show you just a collective of charts that's going to show you kind of 5, 15, 65, looking at these tree branches, not on a daily so much today. Again, we talk about that more at our site at Full Throttle Traders, but today I'm going to show you how price moves in and out of these fly traps. Then just the fact knowing that when not to go in a trade is as important, or probably even more important, as when to trade in a fly trap and when you're near a fly trap. So let's take a look at these and hopefully it'll make sense to you. So the first one here on the fly trap pattern is Meta. We all see Meta. This is trading. These are current prices. Matter of fact, these are just near November 1st. Here's when I took a snapshot of this chart. Now the 9 EMA here on Meta, and this looks like it's the daily chart. So this is one. When Meta pulled back here off of earnings, pulled way back here, people waiting for the repurchase in here. And some people did buy this little buy setup. It wasn't necessarily a buy setup, but it was the first time we had a bar breach of the daily chart. And right off the bat, but this is my chart on the 9 EMA on the 65 of the daily chart. This is actually a 65-minute chart, not a daily chart. The first place you're looking for target is at this fly trap. This would be what I would call a tree branch indicator. A fly trap basically means don't get in because there's a moving average right there. But a tree branch indicator is where prices will stop. Not only did you have the 200 coming in red here, the 50 above, look how powerful that 65-minute chart was on the 9. I mean, within pennies of that area. So I use these as price targets. So if I happen to get into an extended play that I want to catch the little snap back, I know I won't overstay my welcome. Now, keep in mind, before this price went higher, it snapped lower, took out that low. You see that? It's not always what it looks like at the end. It's sometimes just saying is red, right? But as you get close to this, you don't have to touch it. It's going to actually put in some resistance in here. That's one aspect of it. Let's take a look at another chart here. Snow, daily chart. It's difficult for stocks to close 2 times above the TBI without getting pulled back. Now, this is the 8 EMA on the daily chart, as I mentioned earlier. Look back in here. Look at the dotted white line. 1, 2, bam, right back down. 1, 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 red. 1, green, back down. Then finally got back over this with a little bit of a, it was holding in the upper ranges in here, holding back above the 21 EMA and went higher. You can see that right there. The 8 EMA would not let this thing. So if I was trading this stock here, I would never be trading this stock before it breaks out consistently, then a nice pullback, maybe even on a shallow time frame. You got to break out of the daily first. And this tree branch will absolutely hold you back. You'll never chop out. And at some point, it just goes. Usually from a gap. But this just actually kind of momentum early in the morning gapped up to it and through it, held it, and never got down below until we got back over here again. Again, tree branches, in this case here, you would stay out of stuff like this. Again, use these moving averages in context. They will help you dramatically on knowing when to move in, when to move out. Now let's take a look at the 15-minute chart of AMD. Once again, here comes a 9 crossing the VWAP in here. Not that the cross is that important, but the fact is that when this thing gap down, look at it coming off VWAP. We're used to seeing that, but look at the 9 now. VWAP doesn't move like the 9. The 9 will move in here. See this thing holding back, new day, continued gap down. Where'd it go to? Right to the tree branch, right to the fly trap, right back in here. Traders starting to come in and say, I think this is the momentum to get. It gets over VWAP, but there's a Venus fly trap right there on the 9. Boom, gets snapped right back down to this point. Once again, right back over. This happens to tie with VWAP, so that's a given. This is VWAP in there, right back down. See, maintains the 9 EMA. Again, the VWAP was in the purple and the white was in the EMA. Again, it's not about knowing that whereas sometimes you can take these little pockets when it creates a pocket here, like this little triangle pocket, then you know prices are going to snap back to that area, right? That's how you trade that. What you don't want to trade is when you think momentum is starting to go back and you cleared VWAP, you're entering right into the sweet spot of the fly trap. It looks good. It's been down 2 days. You went past VWAP. There's a fly trap sitting there waiting for you to put your order in. It's going to snap shut on here. And you see what would have happened. You would have continued south. Take a look at another one in here. This is a 9 EMA on a 5-minute chart. CVS, notice rarely priced is closed above the 9 EMA on the 5 2-minute bars in a row. So once we came down below the 5, this is a 9 here. Just focus on the white line for a minute here. 1 up, back down, won't close. 1 close up, back down. 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 Right? See how it held? Got on this side just a little bit, and then the 50 caught it right in here and pushed it back down again. Every one of these arrows represents where the fly trap is. And anytime you're coming in here, you never want to go long into this. If you took all this off, you might see sweet spots in your mind. And the reality is they're not. Even though they went past this area, look what happened. No follow through, right back down. You got to leave this alone. Either trade this off the short side by using that fly trap as an area to bounce things off of, but don't go in the fly trap. Stay in the front of the fly trap and trade the other side of that. And then, not that this was a pattern, just be aware of that. This is off of a gap up that failed. Again, take another look at the fly trap here. Apple gap fill. That's a tree branch indicator, but it's also a fly trap. Comes back up to gap fill. I mean, within a few pennies of being at the top there, sold right back off about 80%, 90%. Once it started to get going in, look at it here. Fly trap, fly trap. Once up, all the way down. Never closed above. Closed above once, back down. Closed above once, back down. Got back above it, got clear, right back down. That fly trap got you right at the end here. Nothing good about this pattern. Again, the first sign is if you were long in this trade is that you get out here before the fly trap shuts down on you. Use these as tools to help you stay out of those trades. These are just a ton of fly traps. That's where traders are trying to get back long, and it's not the time to do it. And one of the key things you want to look for is when the chart you're trading on, the 5, the 15, the 65, closes at least 2 bars, solid green, not right at the line, but above, comfortably above that line. It's starting to break loose the fly trap, it's starting to open the fly trap up. It's getting through it. The fly trap is weakening. It doesn't mean enter. It means you wait for, drill down to a time frame, we'll wait for a more quality entry on the smaller time frames. Now, this is just a garbage trade. It's basically what I would call a bearish gap that bullies, right? Bearish gap, bullied up. You would never want to trade this long anyway, but just to show you how the fly trap holds us back all the way through the entire day. Take a look at this trade. This is a DH Horton here, 65-minute chart here, late October this year. 9 EMA coming in a huge gap down. Once again, a nice bearish gap down that bullied right back here. Where'd it go to? Close just above the fly trap here. Here, didn't go anywhere, never broke these highs, and right back down. Went up above the fly trap, that was green, right back down. Right above the fly trap, back down. It only got over from a gap the next day on November 1, but then failed. Right back to the same story again. Again, either use these fly traps of where to trade up to and draw the line. Don't go in that trap. Come out before. Never enter these things when they're very close. Entering from a distance from a target. Go up to the fly trap, draw the line, and stop. Otherwise, it's going to clam down. Don't enter trades in the fly trap. Trade trades up to the fly trap. Okay. This is another one under APA. Once again, gap down. You can see right when it started touching the line here, closed above, but not the high, right back down. It's hard to see them close 2 bars. When they do, you still have to wait for a pullback in the shallow. It just kept this thing in check. You would think at some point there's going to be a balance, bullish market or not. These fly traps using these moving averages are powerful. They happen on every stock every day. And that keeps me scanning a lot because I don't want to be entered this stuff here. And some once in a while, you just see one go. Nothing's perfect. But if you'll follow these fly traps as areas to either take targets at or near before that fly trap, but never enter going into a fly trap, your trading will improve. Don't you be scanning more, not taking the jump that you're taking now. You're taking more quality where these are above these fly traps. So you're not anywhere near them. You're coming back into them. They're waiting to snag you back up. Don't let it happen to you. Here's McDonald's. This is right on the heels of the E. coli, I think, breakout or whatever they had on the stock. So it did gap down and bullied, but look where it bullied back to. This happens to be a convergence of fly traps, meaning that you have the 65, the daily SMA, the 9 EMA on the 65 to 65 minute chart, and you have the 200 right here. But look how it held. Gap back above, came right back down on this side. Look how it held on this side, trying to go. Nice rally up to the 200 and resistance to the left, but it would never break through and close up. Once it did, it couldn't get above. So you have to look at these fly traps is that once you're on one side of it, it's not going to come down into that trap. But if you're trading up into it here, it will always trap you. And then, occasionally they do like this, you come down. There it goes back up, misses, right back up, back down. Gapped up over the red bar, right back down. It takes days for this to materialize unless you have a large gap. And finally, a couple more. Here's the SPY, commonly traded. Once again, big gap down a few days ago, 31st of October, 2024. Big push down. Traders got long as this little bottoming tail came in, taking out the low. But look with the smart traders, I would trade this. Smart traders traded back to the fly trap. They didn't go in the fly trap. They traded near the fly trap, right? Once again, when here, all these are fly trap traders. They're all sucked in long, thinking the breakout's going to happen back to VWAP. Not going to happen. Keep these out of your trading arsenal. I'm telling you, if you just learn what not to go in, you have these moving. It has to be just these. I have just enough on here to tell me not too much, not too little, just enough to keep me out and keep me scanning, looking for more quality trades. Not that the ones that I find that doesn't have fly trap are going to work, but the odds have increased greatly if you stay away from these traps. Thank you for watching our Venus fly trap presentation. My name is Jeff Yates. We cover much, much more available for our members at Full Throttle Traders. Hope to see you there. We are offering a free 30-day trial. Come sign up there, fullthrottletraders.com/trial, 30 days on us. See you there. Hope you enjoyed the presentation.